So traders, this is video 2, answering some questions from clients, from traders on day trading futures and forex. Once again, if you haven't read our disclaimer, please do, and we will be looking at some charts, so please go to full screen. You'll be able to do that by clicking on the button on the lower right hand corner. Now, another question that comes in is slippage on stop losses. Absolutely, or can I should quote the question, can you get slippage on stop losses? Absolutely. At times you'll see the market will sail through in fast-moving markets. I had 3 ticks slippage on 10 contracts one day last week. So it can happen, particularly in low volume markets where there mightn't be a lot of contracts sitting there, and they'll sail straight through your stop. So you can get slippage on your stop loss, and you definitely will. That's going to happen at times. Now, the way I operate as a trader, as a scalper, is I'll put in a limit order to take profits. Now, a limit order, you can take profits at a specific level, or you can use limit orders to open a new position. So for an example, if I was to enter the market at this level here, you can see on my screen I can have my limit order. If I'm say trading futures, let me get this right, I'd be 6 ticks above there. So this is actually a share chart, but it all basically operates the same. So likewise, if I've sold into the market, I can have a limit order to buy, so to sell or to buy. So this really, when you look at this, lots of different types of orders, so spend some time working out which order is right for you. Now, one thing I did want to point out was a stop order. So let me just go and have a look at this, and let me show you where you may use a stop order. So what we're looking at here, traders, is the ES 1000 volume bar, or share bar as they call it on TradeStation. And there's one pattern that I talk about regularly, and it's called the rule of 2. Now, the rule of 2 is where you get 2 full candles closing in the direction of your trade. I love the rule of 2 let me get this right, on forex. It works an absolute treat on trading forex and range charts. Now, what you may do is to confirm that momentum is continuing, you can put in place a stop order, that is a order to buy 1 tick above this candle here. And it doesn't even have to be above this candle. You may have a maybe at a swing high or a swing low or some other trading rule that you have to actually buy using a stop order. So you can actually place 1 tick above, or of course if you're going to use this, if it's a buy stop or a sell stop, you can go 1 tick below if you want to sell into the market. So there's a whole lot of things you can do there. The next thing I want to cover is something we've been talking a great deal about over the last few weeks, is the 89Bs targeting previous swing highs or swing lows. And yes, that's been working an absolute treat. Now, what you may choose to do is to still have let's just say hypothetically, if you're trading two contracts, is still scalping the market for your 6 to 8 ticks on your first contract and trailing your second, or setting in place here an exit, a limit order opposite here your swing high or swing low. So in this particular case, we've had our 89B and up it goes, and your exit could be up here. Likewise, you've had your 89B, your exit up here, 89B, exit up here. Now, if your target's $200 per contract per day, you only need a couple of those a day, and you're doing really well. Now, just for record keeping, I highly recommend that you go and keep records on these, or keep your trade stats, because it also gives you a great deal of confidence in your trading when you can go back and look at it statistically. Most of you are aware that with the 233 tick, which I trade during Australian hours, what I do is I'll record the day's trading action, because on TradeStation, if I want to load up any more than 10,000 candles, it becomes a real pain. And by the end of a week, like on a fast moving market, there might be a couple of 100,000 candles. So what I do is just over a 3-minute video, I'll just quickly record, I'll mark up my chart, and it just allows me to go back and review. Because let's remember, traders, what is our business really about? What do we, well, let me rephrase it. What is one thing we want to become really good at? Well, trading is nothing more than a pattern solving exercise, and that's what I'm constantly looking for, is patterns. Now, for an example, with the 89B and targeting, it's like the blinding flash of the obvious for me. For years I've been trading, but because I'm so focused on scalping, it's only because of coaching one-to-one that I've really someone said, hey, why aren't you doing this? It's straight in front of me the whole time. And because the 89 and the 200Bs, you have much deeper pullbacks, and of course you've got a much greater risk reward. You can get on most of them a good 2-to-1, so there's some great opportunities there. So by recording the past action of your trading, it allows you to go back and to really keep your statistics, or make it a lot easier anyway, to go back, look at patterns and that sort of thing. Now, another question from a student is, he's gone back on a couple of setups and he's got a 65% win-loss ratio. How does he improve that? You hear me talk about this regularly, is the earlier you start trading a trend, the better or the more accurate your trading setups are going to be. So one thing you may want to really closely monitor is, after you've had more than 3 trades in a trend, you want to become more cautious. So let's just have a look at this little intermediate trend that we've had set up just here. Okay, so we see our trigger line go through our 34. So our 8 is now under the 34. So what that is giving us, and these are all coming under the 200, that we've got a market to the short side. Now we actually then have a nice T1. It's also a T10, and there's our T20, and away it goes. So you've got 1 trade, 2 trades, 3, a nice 89B4. Then what do we now want to do? We want to be a lot more cautious. So the sooner we enter a trade in a new trend, the more accurate our trading signals are going to be. Now, 65% is fine if you get in a good 2-to-1, like on these 89 bounces. So it's okay still to have a 65% win-loss ratio. However, when my win-loss ratio is extremely high, my wins, it's because I like to trade early in a trend. Now also then, if you look at this here, you've got a T25, T25, T25. Even though you're on this candle, remember your stop is 2 ticks above here. You've got here a T25. Now, by the way, you may be excused if you had waited. Remember, I like to wait for full candles. Where's our stop? 2 ticks above here. And why we're talking about stops, let's just point out this right here. So in a fast-moving market, let's just say here the market really ran away from you here, and you're using a market order. Where do you place your stop? Because if you go to place your stop 2 ticks above your swing high here, you've got a 12-14 tick stop, which means as a bare minimum, your target has got to be at least a 1-to-1 on a risk reward as a day trader, or at least I recommend that. So just be aware of that. So consideration may be then, in really fast moving markets, you still have your hard fixed stop because you do have momentum. And one more thing before I sign off on this video is going for your target. You'll see this happen if you've got a limit order in, that is to exit at a specific price. You really want to see price tick through. In other words, you'll see the market kiss or touch your exit, your limit order regularly, and this happens to me virtually every day. You've heard me say that if I've got, just say hypothetically on the NQ, I've got say a 14 tick target. Once I go plus for 12 ticks, I'll usually go break even +1. So worst case scenario, I walk away covering my commissions, my brokerage. And time and time again, you'll actually have this, and as a day trader, it'll happen to you every day. You'll go down, you'll kiss your price, you don't get filled, and it rebounds and it goes up through back into your stop loss if you haven't gone the break even. So what do we do about that? Well, if you see that you're going down and you've kissed your target once or twice and you haven't been filled on your limit order, strongly consider exiting, or at least going to break even if you've got a really small target. If you've got, say, a 6 tick target on say the ES, go +1. Now it can be frustrating too, because at times you'll go +1 and you know what happens? It goes back, touches you, takes you out, then continues straight on. Do you know what? That's going to happen to you regularly as well. Happens to me all the time. In other words, I've got a 6 tick target, I go +5, I go to +1, in other words break even +1, it comes back, takes me out at +1, then it continues, it turns around. Traders, that is trading. You know, that's just the way it is. So limit orders, if you keep getting touched, if you haven't already gone the break even +1, I strongly recommend you consider doing that.